So Joe Biden is our soon-to-be official president after his inauguration, of course, which I believe to be January 20th. And I'm sure a lot of people out there are wondering, how will his tax policies affect me? And Joe Biden's tax policies will affect the vast majority of people, ranging from the low income to the very rich. And this video is going to be a very comprehensive analysis over all of his policies. Some are obvious ones that you might already know, and some that are not so well known but are still important. So make sure to stick throughout the video to see which policies might affect you. Also note that these are just policies, so they're still subject to change and they might not even be passed. They do have to pass through other branches of government, and the Senate currently is pretty equally divided between Republicans and Democrats, so we'll have to see what happens with that. Also note that I'm not a CPA or a tax professional. I just really enjoy to learn things and then teach them to people in a way that everybody understands. The first tax policy I want to talk about is the increase in the top marginal tax bracket. So it's currently at 37%, and Joe Biden wants to raise that up to 39.6% for earners who have income over $400,000. Also note that this is actually what it was before Donald Trump was president. So he just wants to raise it back up to what it used to be. The second policy I want to talk about is the corporate tax. Joe Biden wants to raise the corporate tax from 21% up to 28%. Also note that before Donald Trump, the corporate tax was actually 35%. So it went from 35 down to 21, and now Joe Biden wants to raise that up again to 28%. And a lot of you might be thinking, okay, this doesn't affect me, why do I care? But there are actually many studies that show that it does affect you. The question is, how much does it affect you? So this has been a widely debated topic amongst top economists in the world, and the opinion that I'm going to give you is actually one that's kind of in between both, and is a more conservative opinion, and is actually written by a guy named Howard Gleckman, who was a senior expert in the Urban Brookings Tax Policy Center. Oof, that's a mouthful. And he said that basically for every 1% increase in corporate tax, wage earners would bear 0.2 to 0.25% of that burden in different ways, mostly in the way of lower wages. The third policy I want to talk about is one that Joe Biden actually wants to get rid of, and it is something called a step-up in basis. And if you don't know what a step-up in basis is, I'm going to explain it with a quick example. So let's say that I buy a home for $400,000, and then 20 years later, that property is worth $1 million. If I were to sell it at $1 million, I would have to pay capital gains tax on that $600,000 difference. But if I die and my heirs, say my kids, inherit that $1 million property, its cost basis will be reevaluated at its present value of $1 million, therefore wiping out the $600,000 increase. So if they were to sell it at $1 million, they would have to pay $0 in taxes because of the step up in basis. And also note, this is just an example for real estate. This could be for anything considered capital gains, so stocks or even a business. The fourth policy I want to talk about is a pretty interesting one, and it is that Biden wants to reinstate a tax credit that was actually made in 2008 and ended in 2010. After that horrible recession, the way the government was trying to encourage people to go out and buy homes was that they were giving first-time home buyers a credit, a tax credit. And if you don't know what a tax credit is, it's simply a credit that goes against your taxes dollar for dollar. So if you owe $2,000 in taxes and you have a $2,000 tax credit, you don't have to pay any money back. And if you were able to get a refundable tax credit, that means that even if you didn't owe money, the government would pay you whatever that credit was worth. So Biden wants to reinstate a tax credit called the first-time home buyers credit, and it would be a refundable credit for $15,000. So anybody buying their first home might be eligible to get this $15,000 refundable tax credit, which is a pretty substantial amount of money. The fifth policy I want to talk about is that Joe Biden wants to increase the child tax credit from $2,000 up to $8,000, capped at $16,000 for 2 qualifying children. I'm not going to talk about whether your child might be qualified or not. You just need to go to the IRS website and you'll be able to find that. Also, this is a partially refundable tax credit. The sixth policy I want to talk about is the payroll tax donut hole. So as of right now, there is a 12.4% Social Security tax up to $137,700. If you have an employer though, the employer ends up paying half of it, so 6.2%, and you end up paying the other 6.2%. What Biden wants to do is he wants to increase this past $400,000. And the reason it's called a donut hole is because from up to $137,000 to $400,000 income, nothing changes. But after $400,000, that Social Security tax of 12.4%, or if you work for an employer, it would end up being 6.2%, that tax gets reinstated. So if you make $1 million, your $400,000 up to $1 million would be taxed at the 6.2% if you worked for an employer. The seventh policy change I want to talk about is the change in the capital gains tax. So currently, if you own an asset for over a year, you get taxed at the long-term capital gains, which is between 0 and 20%. Biden wants to make it so that if you make over $1 million a year, that benefit of being taxed between 0 and 20% gets erased, and you actually get taxed at your marginal tax bracket, which if you're making $1 million is the 39.6%. So for high earners making over $1 million, your capital gains tax would increase from 20% up to 39.6%. The eighth policy I want to talk about is the student loan forgiveness. So as of right now, if you're a student and you have loans and you end up getting them forgiven, that amount actually ends up increasing, going to your taxable income, and you are responsible for paying taxes on that amount. What Biden wants to do is he wants to completely erase that. So whatever amount of student loan debt you have that gets forgiven, it does not get added on to your taxable income, so you don't have to worry about that. The ninth policy I want to talk about is actually a tax credit that Biden wants to implement called a rentals tax credit. So for low-income individuals, he wants to make it to where you don't pay more than 30% of your income on rent and utilities. So he would be providing tax credits for that to not go above 30%. The 10th tax credit I want to talk about is the health insurance costs. Biden wants to make it where people don't pay more than 8.5% of their income on health insurance premiums. So he would also make tax credits for that. I don't know the details on that yet, but that is the general gist. The 11th policy I want to talk about is a limitation that Biden wants to put on itemized deductions. So as of right now, you can choose either a standard deduction, which is a fixed amount of money, which I believe is $12,000 per person, or an itemized deduction if that suits you and saves you more money. Biden wants to put a limit after 28% of its value for people that make over $400,000 a year. And the last and 12th policy I want to talk about is for business owners. So as of right now, there's a deduction for qualified business income of 20%. Biden wants to limit this to $400,000. So qualified business income past $400,000, he wants to completely phase out that 20% deduction. Anyway guys, that's it for my video. I hope you guys enjoyed it. Make sure you hit the like button if you did and subscribe to my channel if you want to see more content like this.